Okay, now we're going to continue on with this lecture on the allowance methods. We talked about the direct write-off method in the previous video, and we talked about the percentage sales method. We're now going to look at the receivable side of this. We've got two methods we're going to look at. We're going to look at the percentage of accounts receivable, and then the percentage of accounts receivable aging method. Okay, you can see here we've got our same information, but I've added a little bit more. Sales $1 million, accounts receivable $200,000. Percentage of sales, we used 1%. We're not going to use that in this video because we're not using percentage of sales method. We're going to be using percentage of receivable. Well, I put in here also we have an allowance balance of 1,000, and the percentage of receivable is 4%. So from here, we're going to take 4% of our receivables, and that's 8,000. Now, when we use the percentage of sales method, that was the adjustment. Well, that's not the adjustment here. When you take the percentage of receivables, that's 8,000. We're saying 8,000 of this is uncollectible. So down here you can see I've already written my T account. So what I'm saying is the ending balance is 8,000. That's what we want it to be. But what is the balance right now? It's a $1,000 debit. So if we plug in $1,000 right there, that's the balance. This is what we want it to be. To get to this balance, we've got a debit of 1,000. To get to a credit of 8,000, we need an adjustment of 9,000. So there's our adjustment. We're going to debit bad debt expense. Sometimes we call this uncollectible account expense. Bad debt expense, 9,000. That's our adjustment. And then we're going to credit the allowance for doubtful accounts, 9,000. So there's our adjustment. Okay? So you can see how it's a little bit different. I think it's easier. I like this method a little bit better because think about it. If you take the percentage of accounts receivable, 4% of that, we're saying, well, 4% of this is uncollectible. 4% is 8,000, so we have to get it to that balance. So that's how we plug it into our adjustment. We need an adjustment of 9,000 to get this to 8,000. Now, if we're going to be looking at the balance sheet on this, our accounts receivable is 200,000, and the allowance then is 8,000. So our balance is 192,000. If someone doesn't pay us, what's going to happen? What's going to happen overall to this account? And I'm hoping you're thinking from the previous video, nothing's going to happen because we wrote off the expense. We wrote off the expense here. When we write off an actual bad debt, then what happens is accounts receivable will go down to 199. So I'm just going to put that right here, just the 199, 199,000. But the allowance is also going to be reduced by 1,000. So you can see there, our overall balance wouldn't change. It's still 192,000 overall. Okay, so this is the percentage of receivables method. It's similar, but at the same time different than our percentage of sales method. So if you're still a little bit confused, you may have to go back to the previous video and take a look at how we did this one and then compare it to how we're doing this one. This one sometimes is called the income statement approach because sales is on the income statement. And this one oftentimes is called the balance sheet approach because it deals with a balance sheet account. Okay, now let's talk about the aging. The textbook does a good job of explaining the aging. I'm not going to go over an actual aging because that would take a little too long. What happens is we categorize our accounts receivable into ages. So some aren't due yet, some are 30 days past due, some are 60 days past due, some are 90 and so forth. So what happens is we divide up our accounts receivable in that. Those accounts receivable that are the oldest are more likely to be uncollectible. So what happens is instead of having just one percentage, 4% for our total accounts receivable, we're going to have various percentages for each category. So as these accounts receivable get older, then that are in our total accounts receivable, as we age them and as the older ones are still there, what's going to happen is that percentage we're going to use is going to get bigger and bigger. So like, for example, the accounts receivable that are currently not due, the percentage might be 0.5% are going to be uncollectible. Whereas those that are 90 day past due, those might be 40% uncollectible or 50. Okay, so you'll go off past history and see what you think this should be. Okay, so what I'm going to do now is I'm going to use the same information, bad debt expense and allowance, but I'm going to estimate that. Let me erase some of this. We'll use the same balance. It starts with a debit balance of 1,000. okay? I'm gonna just say, let's assume that our ending balance in the allowance account is 11,000. When we took all of our accounts receivables and we took their percentages, we divided them up into categories, multiplying by their respective percentages, let's say we came up with $11,000. So now the adjustment would have to be 12,000 because we have 1,000 debit. To get to that 11,000 credit, we need 12,000. So this contra asset account is going to have that balance. So our entry then would be the adjustment, the 12,000. And there we go. Okay, so that's pretty simple. Let's see. The balance sheet format, I'm not going to go over that. That would be the same thing. We would start with 200,000 in accounts receivable, less our balance of 11,000 here, which would give us 189,000. Okay, that would be our net accounts receivable. It's the accounts receivable less the balance in the allowance account. Okay, well, I hope this has helped you out. You may need to go back and listen to this video again, watch this video again. Make sure you pay special attention to the facts here, because you need to understand these in order to calculate what the balances are, what the adjustments are going to be. Let me point out one other thing. In all my examples, I've said that the balance was $1,000 debit. Could it be $1,000 credit? Sure. Whatever the problem gives you, that's what you have to go with. So in this example, if it was $1,000 credit and we want to get to 11,000 credit, we wouldn't credit this 12,000, we would only have to credit it 10,000. Okay? So this were, instead of a debit, a credit, and this would change our adjustment. Our adjustment would only be 10,000 because we've got 1,000 plus the 10 would get us to the 11. So this adjustment then wouldn't be 12,000, it would be 10,000. Well, good luck with the chapter, and you're probably going to have to review the text, and at the same time review these lectures at least 2 times, if not more. Good luck.